Some risks confronting our district banks would be the impact of the low energy prices and also commercial real estate portfolios. In regard to the low energy prices, even though the economy in this area is more diversified than it used to be, the fact is that low energy prices do take their toll on the economy and do make it more difficult for the banks. So in looking at the loan loss reserves within our district banks, so what we're seeing is because of the lower energy prices, we're seeing the banks have some pressure on their loan portfolio. So what happens is as the banks feel that they're going to lose money, so they're looking at their loan portfolio and they say, you know what, we think that these loans won't be paid in full, then they recognize the loss that they expect to have on that loan. And so when they recognize this loss, they create a provision. And so we're seeing more loan loss provisions because banks feel that they're going to see more losses on their loan portfolio. So in terms of non-current loans in the 11th District, what we're seeing is they have started to increase slightly recently. However, there's a couple things to keep in mind with that. First, they're still at very low levels historically. And second, they're still well below the non-current loan rate in the rest of the country. Of course, having said all of that, the other thing to keep in mind is non-current loans tend to be a backward-looking measure. So since we're coming out of a time of strong loan growth, new loans don't go bad immediately, right? Loans don't go bad immediately. They tend to go bad after a little bit of time after they're seasoned. Then the borrower has may have some problems, and that's when the loan goes bad. And so if we look at non-current loans, you say, well, it's low, so the loan portfolios are strong, there aren't any problems. All it means is whatever problems or weaknesses may be in the loan portfolio haven't come to the surface yet. So in looking at bank profitability, comparing our district banks to those in the rest of the country, for more than 10 years, our banks have posted higher profitability than those in the rest of the country. A lot of this has been driven by net interest income. Our district is considered a community banking district. Community banks rely more on net interest income, and that's been more successful in driving profitability. Having said that, banks in the rest of the country have narrowed the gap recently so that there really is not a huge difference between the profitability in our district and that of the rest of the nation.